Good evening, everybody. Thanks very much for joining us here for what I hope is going to be a provocative conversation. This is probably your 1500th conversation in Davos, so it puts a lot of pressure on us to try and make this as provocative as possible and stir things up. We're going to be talking about disruption and what it's going to take to not be disrupted and play the disruptor. Whenever we talk about disruption, two comments come to my mind. One is from Bill Gates, and I distinctly remember this. He says that if you overestimate the cost of being wrong, which is very often what a lot of CEOs end up doing, and we underestimate the cost of being late. So I think that is important when we talk about disruption, and especially in the context of the kinds of changes that we're seeing and the pace at which these changes are hitting us. And the other one is from Al Rees, and he says that the job of the CEO is to find the future in current activities, and that's what these gentlemen here are going to do or hope to do for the sake of the companies that they lead. Let me introduce our panelists here to you. Anthony Jabbour, the Chief Executive Officer at Dun & Bradstreet. Many thanks for joining us. Also with us, George Oliver, Chairman and CEO of Johnson Controls, and Salil, Parekh, the CEO and Managing Director of Infosys. Many thanks for joining us here today. Salil, I'm going to get started with you. You're playing host today, so you get to answer the first question as well. When we talk about disruption today, there's all kinds of disruption. Largely, the focus seems to be on the disruption that's driven by technology. Outside of that, what do you believe is the most disruptive force that you're having to grapple with?
In fact, given we are a technology business, it's interesting because when we interact with clients, the thing that stands out the most are elements around culture and elements around talent and reskilling.
Okay.
And I'll talk a little bit about both. On culture, we can see clearly companies, organizations, individuals, either you're ready to be changing, disrupting, taking that leap, or you're not. And very quickly, we can sort of self-select into that group. And there's also culture which builds some sort of a tolerance or an openness to try, maybe not always succeed, but move on and not penalize. And so that's evident in some of the work we do. The second is on talent, which is we absolutely need talent that's ready for this change, almost driving it, and also skilled for it. So you need to build an infrastructure that enables that skilling. So those are the two non-technology pieces. And I know we'll talk about many of the technology pieces, but let me start with that.
We'll talk about many of the technology pieces, but I'm glad that you brought up culture. And George, I want to get you to address this issue because it's very important for an organization to actually nurture a culture that will encourage disruption within. Because disruption is not just what happens to you, it's also what you can do to others. So, if you're not thinking like a startup, you're probably staring at a shutdown. How do you then build the culture of disruption?
And we're off.
There we go. There we go.
Let me start by telling you we're a $25 billion, 130-year-old startup.
Yes.
Right? So with that...
So you've done some things right.
We do. And so we do a lot of things. We're a buildings, infrastructure business, HVAC, fire, security, and a lot of the building systems. And these systems historically, we've served the market, pretty much the same for 130 years. And what's happening now with the use of the data from all of these systems, and then the insights that's created from those data, you can create solutions that are far beyond what we ever would have imagined. And it's all in line with sustainability. So as a company, we provide the most sustainable, safe, secure environments. And although we used to do those better every year, incrementally, kind of left to right, now with data, looking at what we do right to left, much bigger prize. And so sustainability with energy, for instance, taking all of the data insights combined with our leadership HVAC product, we can reduce energy 30, 40, 50%. This is the theme of the WEF this year, right? So I think what's happening for us is forcing ourselves to be outside in, forcing ourselves to get with the customer to understand their vision of how they're disrupting themselves. And then how do you position yourself because you're a real partner in being able to deliver on their disruption.
You know, part of strategy is also to do what your competition allows you to do. And a lot of the conversation that we're having here is around how data has sort of become the centerpiece of a differentiated, disruptive strategy. Anthony, share your thoughts with us on what you make of it and how you expect this to play itself out.
Well, sure. You know, Dun & Bradstreet is all it is a data and analytics company, right? That's all it does. It's 1.8 billion worth of it, and really, what we're seeing here is there's just a tremendous amount of data. It's funny. George and I were talking in the back. And my initial concern was, well, what if I don't agree with? I know it could make some, for fireworks, but we actually
that would be nice, by the way.
we can pretend we don't get along if you'd like. But George and I were saying, the data's always been there.
Yeah.
But what's happening is now, as people are getting more excited about it and leveraging it, they're cataloging it, they're linking it, they're cleansing it, and they're driving it. And certainly from a trend perspective, and you see it here, but you see it everywhere. There's a dramatic increase in the importance of data, the importance of analytics. Everyone's looking at that. How can they drive their business more from that? And so it's a real exciting industry to be in right now.
And that's the point that I want to take up with each of you. You're absolutely right. Data is something. It's the new commodity. It's the new oil. It's the new water. Whatever you want to make of it. But the fact of the matter is, everyone now seems to have access to at least most parts of that data. Some more than others. But how do you then create a differentiating strategy to be able to utilize that data and capture value?
Well, one thing I'm going to correct you on, because our chief data scientist at Dun & Bradstreet corrected me, because I said it's the new data oil, and he says, you're crazy. He goes, oil's finite. It's limited.
As is water.
Absolutely.
Yeah.
He said data, it's an interesting stat Sam has shared with me. There's 1.7 megabytes of data being created per person per second.
Wow.
So I remember, 30-some years ago when I was in, college, I built a computer. I had a 20 megabyte hard drive, and everybody wanted to be my friend. They wanted to use my computer, 20 megabytes. I was the king at the University of Toronto. And here, every second for every person, 1.7 megabytes of data. It's just, it's growing, tremendously. So in terms of how you differentiate, I think what's happening is people are getting expertise in what they do. So at Dun & Bradstreet, we're only business data. That is what we focus on. It's not consumer data. It's really around business. For you to stand a chance to be best at what you do, you need to specialize, I think.
And picking up on the point that Anthony made there about specialization, as we sort of traverse this data-driven ecosystem and companies move on the path to digital transformation and industries move on the path to digital transformation, Salil, how important is it going to be for more collaboration? Do you believe that we are going to have an ecosystem approach to be able to deal with disruption and not be disrupted?
Interestingly, the collaboration aspect is becoming larger and larger. Why? Because when industries are combining and overlapping with each other. So we see this when we work with people in the industrial segment, and then you work with someone in the telco segment. There are so many places that these things can overlap. For example, what is being done with the 5G use cases today, all of those are leveraged across multiple industries. And we are seeing that we are pulled in more and more to work with our clients to connect with other clients, as opposed to just us connecting with them. So collaboration is massive. There's, of course, a need for openness and some standards. And those are things which I think are now not very clear with the way the world is evolving. But hopefully we'll come to that in time.
George?
I don't think you have a choice. I think that the way that these ecosystems are forming, we still have to be really good at our core. So we design, develop, leading HVAC equipment. We design leading fire and security systems. And that's still going to be our core. So everything we can do to enhance the core. But from a reinvestment ratio, when you look at all of these other technologies, whether it be AI or machine learning and some of these other capabilities, there's significant investment that's being made elsewhere. And so I think for companies, industrial companies, it's important to figure out what your core is. How do you continue to strengthen your core? And then have the digital capabilities that understands how do you then leverage all of the other capabilities within the ecosystem that combined with our value proposition creates something much bigger for the customers that we serve.
One of the issues that I want to talk to the three of you about is how crucial a role regulation is likely to play in future disruption. I mean, you know, in the US, for instance, at this point in time, the Democratic presidential candidate is talking about breaking up big tech. There's been data privacy regulation. India is on the cusp of putting forward a data privacy regulation. We've already got the GDPR in play. How much is regulation going to disrupt? Anthony?
I think it's going to disrupt a tremendous amount. It has to. If you, because when you think what forces a company to change, what would force George to change his company? There's nothing greater than regulation.
Yeah.
If you think of what we all choose to do, every business out there, regulation you need a painkiller for. Right?
How many are you taking in a day?
Whereas, you know, candidly, other innovations or things that, you know, George would do for his business, I think of them more as vitamins.
Yeah.
I'm going to do these things, and overall, I'm going to be great. But regulation is a painkiller you need to do, so it's going to force the change across all industries. So it'll certainly be a major force of disruption.
So I think the industrial leaders have a role to play in driving standards, you know, within the industry. Like for instance, in our space, we're a leading security provider. Lots of debate on facial recognition, right? And the application of facial recognition. But the solutions that you can provide and the safety and security, you know, the impact that you can make is off the charts. And so we've been engaging with government. We've been engaging to say you can't stop the technology development. What you've got to do is lead the application of how that technology gets applied. And that will require regulation. Or standards, in industry standards.
You know, just from an India perspective and an Indian IT services company perspective, Salil, regulation is forcing a change in the business model that you've been accustomed to over the last 2 decades. I mean, whether it's visa regulations that are changing, moving the offshoring model to a different model, how disruptive is that today for you?
Well, so I'll get to that. Just one comment on what was said earlier. I think part of the regulation is almost self-regulation. And there was a lot of discussion now on data and privacy and trust. And there, I think there's inherent views, especially among large tech and, of course, people like us who are in tech, to be self-regulated. Coming to your point, I think we've started to build a business model which enhances what we've been doing for many years. We've created a lot of local activities in most of the markets we're working in. We have 5 new digital centers in the US. We have 9 digital studios worldwide. We have capabilities which we didn't have. We're recruiting, last 12 months, 1,800 college graduates outside of India. We still recruit another 15,000 in India. So all of that's going on to build a business which is much more resilient for the future.
You know, you brought up the issue of skilling and talent, and we talked about culture as well. But when we talk about skilling and talent and the jobs for the future, given the kind of disruptive changes that we're expected to see, and this is something that companies and governments, more importantly, are grappling with. How do you skill? What do you skill? You know, what are the jobs of the future that you should be skilling for? How do you start to address some of those questions?
Well, it's a great question, and the thing that I always try and do is to not have my organization paralyzed. So them asking, well, how do we start? How do we solve this giant question? Because any action, any movement is better than being frozen. So that's what I always want to do. I always want to encourage them that innovation is something that they can do. It's not something that's only done in Silicon Valley. It's something all of us can do. It's solving a problem, just making anything better, getting into that mindset of that. And so naturally what happens is we just keep adding on more and more skills to our existing employees, and there are a number that will obviously bring in net new, like for net new technologies. But it's not something that's a 0 or a 1. There's a way for us to get to that, and with the right leadership, you can bring your organization along with you.
It comes down to having to make choices, and how do you make choices when there is low visibility on what the future holds?
So what we've done, just start with myself. We recently went through a process with our board to define what is the spec for the future JCI CEO. And if you were to see that spec today to what it was 5 years ago, it's very different. And there's a significant element of being able to have acumen with digital capabilities in agile software development and the like, more of the tech capabilities. So it's rapidly changing. So it starts there. And then you then have to assess, do you have the leadership that has the acumen? They don't have to be software developers, but they have to understand where the value is created with digital, whether it be customer focused and creating value for customers, whether it be productivity for customers or productivity within our own four walls. And then to get that right, then you can go across all of our workforce. We have 100,000 people globally. And so we have a lot of different categories of workforce. So manufacturing, we have service, people doing service, engineering, commercial, and digital. What we're trying to do is create a digital toolkit that instead of pushing traditionally you push training. And everyone goes to a class, you get training, and you go back and you do what you've always done. Where in today's environment, it's agile learning. It's getting a toolkit so that they can pull and learn real time as they're deploying that toolkit to ultimately create value.
Let me pull this now to technology. And you brought up 5G, and we're going to have to see how that plays itself out, what the use cases will be. The world is not entirely, or at least not all parts of the world are ready for autonomous cars and so on and so forth. But, cloud, for instance, it significantly brought down cost of doing business. Similarly, what kind of disruptive tech changes do you see that one should be prepared for?
Well, the ones for now are really, and the ones we've discussed here, which is cloud, data. We talked a little about 5G. The whole experience concept of how individuals interact. If you look a little bit ahead, we have really quantum, which is just around the corner in terms of applicability. It's not in any sense scaled or commercial yet, but we can see that that's starting to be discussed in a big way, and we'll start to see it. On 5G, I think the use cases exist on a broad variety of areas, and especially when you combine that with cloud. The point there is much more on latency, which is immediacy of use, as opposed to just distributed use. And I think we'll see a lot more of that coming through.
Anthony?
Well, I think, certainly, I'm going to go back to a point that you made. I won't repeat the technology, which I agree with Salil. But the point you made about collaboration. If you think every business, what's every business owner in every country want to do? They want to grow their revenue, they want to improve their margins, they want to stay compliant, so tomorrow morning they could do it all over again, right? And what's how do they grow? They leverage their capital. And if you look, companies used to build something and it'd last 10 years, and then they'd build something and it'd last 10 years. Change is happening so quickly, you're building it, and then in the next year you have to change it. So it's forcing a collaboration. So for me, I look as much on the technology side as the capital deployment to make sure you're collaborating, finding the right partners so you can be quick. And the most important thing I'd say culturally for me around innovation and disruption is conveying urgency to your colleagues. And that to me is the most important thing. If they may not have programming skills like George said, but if they have urgency, they get the outcomes.
Transformative changes, I mean, we've seen what the mobile phone has done, we've seen what the cloud has done. What kind of transformative changes are you now expecting?
So in the industrial space, I think what's happened with the consumer is happening rapidly in the industrial space. So the delivery of data, the application of data, real time. So anything that it enhances speed, that enhances the AI capabilities, ultimately making decisions, and then how ultimately that gets deployed within our infrastructure is what's going to create or maintain leadership for us.
I'm going to take some questions here from the audience. If anyone has one, you could raise your hands. We'll try and get a microphone across to you. We're doing such a good job that nobody has questions. So let's continue.
Not sure about that.
or they're waiting to get to their drinks. So could be either one of the two. But let's continue the conversation. And I want to talk about how you create moats around yourself from not being disrupted. Organic strategy, of course, but how crucial will inorganic strategies be to prevent being disrupted yourself?
I think it's extremely tricky, frankly, to create these moats more and more in our business. I think there's ways that were being done in the past which are not any longer applicable. What I mean is the ability of technology to disrupt is far superior today than it was in the past. I think the acquisition approach potentially gets you a little bit more time to market. So if you're a little bit faster or not as slow as the slowest competitor, you have a better chance of survival. But really, the paranoia that each of us have to live with is this disruption, because it's easily something that can happen to you as well as to anyone else.
So you live with the paranoia every day?
Pretty much, yes.
It's in the job description. It's in all our job descriptions.
It's in all your job
Absolutely.
descriptions. What are you most paranoid about today?
What am I most paranoid about today? It's really staying relevant for our clients. I mean, obviously, I think the one every leader has is cyber, right? And it kind of goes without saying. So I won't. I know we spend a lot of time on that.
Don't
in other
exchange
sessions.
WhatsApp messages with anyone from the Saudi kingdom. So that would be a good idea today. Today, that would be a good idea.
But it's really, I think, for all of us, how do you stay relevant for your clients and not get disrupted? Like the world's changing so quickly. And so it forces, we took Dun & Bradstreet private just under a year ago. And in February. In July, we did an acquisition. In December, we did another acquisition. And really, the July acquisition was a company called Lattice Engines. What it did was it took our clients' data with Dun & Bradstreet data, with alternative and digital data, brought it all together and helped cleanse it and integrate it into their CRM systems like Salesforce.com or Microsoft Dynamics and their marketing tech stacks. What we tried there was saying, if we can make it frictionless to get all this data and it just feed their systems, we'll stay relevant. We're helping our clients. And I think the most important thing is that you stay focused on your clients, keep solving problems for them, and your threat of disruption drops significantly.
George, what are you most paranoid about?
So we did the merger we did, a very large merger, Tyco and Johnson Controls 3 years ago because of potential disruption. Tyco was a fire and security company, relatively low growth, more compliance type solutions than growth. And so we saw the opportunity to take an incredible portfolio and combine it with a building solutions company. And then the combination of that with all of that capability was then going to be the differentiator. And so that has played out pretty much as planned. And I would just go back to basic strategy. When you look at your business, whether it be a product or a service or a solution type company, what is your value proposition? How do you differentiate that value proposition? And how do you sustain differentiation that allows you to be able to reinvest? And so you've got to see the future. So in our case, we're always looking at, based on what our position is, what are others doing? How do we continue to strengthen our core and make sure that we protect our core value proposition? And then as we discussed earlier, how do you enhance that core? Because now in the world that we're in, we cannot afford to reinvest in all of the capabilities within the ecosystem. How do you leverage others with our combination that truly positions us in a stronger position than our competitors? That's what I worry about. So you've got to be very agile in your strategy development. You've got to test your value proposition all the time. And you've got to be open-minded relative to how you deploy new business models, new technologies to enhance what you do. And ultimately, the decision's the customers. Right? At the end of the day, when most industrial companies were built inside out, develop the next winning gadget, right? And that's the way it was. And there was long cycles. Today's cycles are compressed. And so if you're not understanding customer and translating that into the next generation solution, you're going to be left.
It's interesting that you said that it used to be an inside-out approach, and now it's much more outside-in, which means that the ability for a company to listen to what the customer is saying has gone up exponentially. So it's really the customer that's driving strategy, the customer that's driving product innovation. How is that working for you at Infosys?
I couldn't agree more. In fact, the point that was made earlier about client relevance, I think that's exactly the approach we've put into place. Today, clients are shifting their budgets completely to how they want to transform digitally.
Yes, to you and hopefully not your competitors.
Again, to share a statistic to underline the fact, we grew our digital business 40% last quarter. There's no competitor growing at that rate. So clearly clients are looking at us and our investments in a positive light. But even more, that's one quarter. The real focus is to keep inventing the new ways of doing things, the point made earlier by George. And that's the approach that plays out for us. And hopefully, if we keep doing that, we'll see more of it.
The key risk and the key opportunity, Anthony, I'm going to ask you, we're at the start of a new decade. And by all accounts, disruption is going to be something that we are going to have to deal with. The pace of it may change. It may perhaps go up even faster. But, the single biggest opportunity and the single biggest risk that you foresee?
Well, I'm going to say for sure the speed will increase. It without question will increase. I think everyone would agree with that. From a risk perspective, I think some of the regulatory changes that could come in could cause tremendous impact to a lot of businesses out there. And at times, trying to do the right thing maybe, but not understanding it completely enough to actually affect the change is one of the things that I worry about. Also, just the improper use of technologies like AI, right? If you have someone who's biased that's programming the AI, you're going to have biased AI, right?
Yeah.
And so those are some of the risks. I think the opportunities they're really tremendous. I really think, as I look at all the clients that we serve, it's more about an opportunity. Can we be there with the next idea for them versus worrying so much about will they go to a competitor? So it's incumbent on us. And I like the scale of our existing businesses versus a startup, because we do have the clients, to your point, where we can listen, we can get the feedback from them, we can respond with urgency for them, and that helps with the innovation. So I'm very excited about the opportunities in front of us if we stay committed and listening to our clients, like I believe all great companies will.
Absolutely. George?
So you asked the whole panel here is, are you a disruptor or are you being disrupted?
Yeah.
Leadership companies are the disruptor, right? That you maintain, you need to understand that you might be disrupting your current product or technology.
Yes.
But because of the value creation with your next generation, it's going to be that much bigger. And you got to have confidence to ultimately play that out. Too many companies, when they have a leadership product, they work all day to protect that versus the time that's spent in understanding what the potential future could be.
Yeah.
And so I think the technical side of it, and I think it's prevalent in every boardroom, is cybersecurity. That every company now is a digital company.
Yeah.
And so how do you make sure that within your own four walls you've got the right protection, but then you're working with other partners that also bring capabilities to enhance the overall protection of the data.
Yeah, that's an interesting point that you make. And Salil, I want to ask you this in the context of the fact that you have to deliver on quarterly numbers, which get analyzed to the last decimal point. So you have to protect the past, but you also have to invest in the future. And that's a judicious balance that you are going to have to arrive at. And I know in India, every time companies like yours talk about moving away from the legacy business, there is an analyst backlash and an investor backlash. And then you try and convince people that, no, we're not going away from the bread and butter business. So how does a leader make this judicious balance between protecting the past and investing in the future?
It's a tricky point that you make, because the scrutiny is, as you described, fairly rigorous. But as
to put it mildly,
as George was sharing, I think if you don't have a sense of where you want to go, you almost, by not doing anything, are guaranteeing that you're going to be disrupted. So it's a slippery slope you're on if you actually do nothing. Actually, the simplest thing to do is to listen to your clients, the point that Anthony made, and make sure you're remaining relevant to it. Once you're in that path, I think it may take you a few quarters in the context of the question you ask, especially in our Indian fishbowl that we're in. But nonetheless, once you see that traction coming, most people understand that this is the future they're driving to, and hopefully recognize it.
So when you're inside that fishbowl looking out, what do you see?
Well, I'm in any case sufficiently paranoid and in the fishbowl, so I've gotten used to living.
All three of you are paranoid. That we've already discussed.
Well, you sort of. It's almost, I don't think of myself in the fishbowl, but I can see that that's how the scrutiny works on companies, and especially companies like ours in India. The key there, of course, is convincing ourselves, which is our leadership, our clients, that we are focused on them, and then that translating to how everyone else sees it.
You know, and this is a larger issue, and I think a lot of companies are grappling with this, that if you are going to have to deliver on quarterly results and you're being scrutinized and so on and so forth, does it take away the ability to truly be disruptive? Does it restrict you in a sense? And many CEOs are now talking about wanting to not be public anymore so that they have the flexibility and the ability to do so. And to your point, does it give you that much more flexibility and freedom?
Well, that's a great question.
To be a disruptor.
Yeah, and I know, except for our peers, every one of us wanted to run a publicly traded company until we ran a publicly traded company. And there is a lot that comes with it. Look, I can look at it both ways.
Yeah.
And I'm naturally an optimist. So the positive way I look at it being public.
Paranoid optimist.
A paranoid optimist. Yes, a paranoid optimist. My wife is nodding vigorously. Or she's sleeping, I'm not sure.
Could be both.
Could be both. What I think is great about being publicly traded is there is a pressure to move forward and to grow. And that constant pressure, I think, is helpful at a certain level. Certainly, you look at some technologies like Square. When Square first came out to merchant acquiring, the big value proposition was they just priced it so low. It wasn't the technology itself. Yeah. It's just they priced it at a level where it couldn't make money. And it didn't matter. And so they gained market share. So those are the two sides, I'd say, of being public and being private. Mm-hmm.
So my take on that would be that the single biggest responsibility of a CEO is how you allocate resources. And so I think inside out companies every year just take the budget they had last year and they incrementally, make it better the following year. And that's how these companies have been run. So I think we're at in all of this disruption, it's an opportunity to reassess, where you allocate your resources, which ultimately is your core. And then where you're not core, then stop and get out of, and ultimately get partners that contribute to your core. Because I think that's where a lot of these, over time, when you look at the reinvestment, it isn't ultimately aligned to where the future is going, right, within companies. So I would say, and then if you do that well, and you create confidence with your investor base, and then you want to go make another big bet, they will typically follow.
Yep, I agree.
But you cannot do it without that clarity, without understanding what you've done to ultimately reposition, and then in addition to that, whether it be M&A or other reinvestment, ultimately, if it's core and you can make the case for the business model and the value proposition, 9 times out of 10 investors will follow.
Someone brought up the point about scale. How important is that when we talk about playing disruptor, size, scale, and is that something that you're focusing much more on now, Salil?
In our sector, and I think in many sectors, scale is a tremendous advantage, and I can see that in the way once we decide we are sort of going and investing in a certain area and driving it, the scale massively helps. You look at a technology like cloud. We today are partnering with some of the largest cloud providers, and we are now the #1 partner for one of them from nowhere within the last 24 months, because we have the scale. Once we make a decision, we can then work with our client base to see if it makes sense for them and drive it through.
Anthony?
I think scale certainly matters from multiple angles. One, like I mentioned before, getting client feedback. I mean, when you have scale and you have large clients, that's the best input. In terms of, and really when you've got a great relationship and understanding what their needs are, it puts you in a great position to, to solve those and to move forward. I want to add one point, to what George made and agreeing with him. When we talk about how do you pivot to disruption, the mistake I see most companies make is, and George had highlighted it, I've always spent X million dollars on something.
Yeah.
And so I always have to spend it. And George is absolutely right. The key role of a CEO is how do they allocate capital to grow the business? And so that means taking that spend, which is $5 million a year forever, and saying, next year it's going to be 4. And that 1 million is going to go towards innovation. And the year after, 3.5, 3. And really solving what your clients need I think that shift is the biggest thing. I'm sure many organizations out there are faced with that, where they're stuck in spending what they've always spent versus having the courage and the leadership and the executive sponsorship to pivot it a bit, to start putting money in innovation. So it's not let's bet this whole company. Let's just make one step. And that one step leads to two and so on.
Yeah, so I would say, over my 37 years, 9 times out of 10, scale gives you a competitive advantage, because what happens is your margin structure can be better because you're more efficient. Because of that, you can reinvest more than your competitors and still have a competitive margin structure. So there's a lot of advantages that come from scale. So it's hard to debate that it isn't one of those elements that you got to be, wherever you play, you got to ultimately be number 1 or 2 or 3 to really maintain your, number 1, your margin structure, your reinvestment, and your competitive position.
I think we're seeing that play out the 1, 2, 3 rule. It's playing itself out across sectors and different industries. But going back to your 37 years, bets that you made that didn't work out and the learnings from just one. You don't have to give a long list, just one, the learnings from it.
Well, there's been, a lot of bets. I spent time in GE and Tyco and Johnson Controls. There's been, I think early in my career, from an operations standpoint, I was pretty bold on driving, Lean, Six Sigma, the early phases of digitization. And because of that, it might not have played out as planned, and you kind of go through these pivots and adjust. But there's been investments that we've made that you on paper they look great, and then through the cycle not so great. And what you got to do is, I learned from Jack Welch that you can do that once and you can learn from that. But you better learn, and you don't make the same mistake twice. And so, part of it is that's part of business. You got to be bold. You got to make decisions, and you got to take some bets. You just want to have more right than wrong.
Right? Absolutely. You can't keep doing the same thing and expect a different outcome, and that's perhaps the trap that a lot of people get sucked into. Anthony, a bet that you made that didn't work out and the learning from it?
Really none. I'm perfect.
I'm going to ask your wife. Okay,
my wife is shaking her head the other way now. I made one in the late 90s in the dot-com era where I was launching direct banks. And we had launched one in Canada. It was successful. We came to the U.S., to launch them. And it was just one of those disruptions that was too early. So, clearly the world is there. So at times as we talk about this and how we all have to go faster, what I'd also caution is have a foot on the brake as well, because at times you can get there too quickly, and that's not good either. So.
Salil?
There's several, so it'll be a long list if I go down that path. I think a couple that stand out, I think they sometimes you take a bet on some people, or you take a bet against some people, and that I think I've learned from my past to be a little bit more cautious about. I think usually my experience now is, most people need a bit of time to play this out and not be in a big rush. So all of the leadership at Infosys, you're fine. We have several years to go through with this. The second really is more on technologies. I remember being in grad school studying artificial intelligence, and I thought we were going to solve all the problems back then. It's only taken 20 odd years for it to become a huge play, and a lot of wasted time in that artificial intelligence first phase.
All three of you spoke about needing to make a pivot at some point during the course of your careers. What is it that you need to be mindful of? Because you, as you pointed out, you don't want to bet the entire company on a future bet. You want to protect the past, yet invest in the future. So while you're making those pivots, what is it that you need to be mindful of so that you, in the quest for disruption, you in fact don't end up getting disrupted because you're distracted?
Yeah. I think to the extent that you stay relevant to your clients, and it's not an enormous bet, it literally is one step at a time, staying relevant to them. I think you just dramatically minimize the risk of disruption. I think of a number of companies where I've been at before, and where there's legacy systems that have been in place, and instead of stopping and saying let's just pull them out and create something which is really expensive, really risky, and it just gets us back to where we were before, that's not the right value for our clients. And oftentimes, when I was in banking, we had systems that ran on a mainframe. I said, do you care if your interest is accrued on a mainframe or a distributed system or in the cloud? A customer doesn't.
Yeah.
What they care about is to have a digital capability to look at it wherever I want, to do a transaction whenever, wherever I want. And so I think staying relevant to your clients is the biggest thing that we could do in terms of the pivots. And it takes the pressure off of making that, letting your business atrophy, than making that one grand slam attempt, and that's when all the risk creeps in.
Yeah, George?
So for me would be this past year, I took over, it was about 2 years ago as CEO, chairman and CEO of Johnson Controls, and we had a mixed portfolio. And we had a very strong buildings business, like I said, about 25 billion in revenue, and we had a battery business, power solutions business, battery business, automotive battery business, and we built 160 million batteries. Yet that battery business was extremely profitable. And so when you looked at the earnings of the company, it was carrying 40% of the earnings of the company. And so when I took over, I said, we need to solve the portfolio. And it was not something, because we're early in the days of the merger. And even from a board perspective, you're gonna divest 40% of the earnings,
your business,
and you're gonna ultimately make that up in multiple in the market.
Really?
Big bet. And so, and I learned this from Ed Breen that you never sacrifice making the right decision strategically, whether it be mergers, acquisitions, divestitures, reinvestments, whatever, because that's the first step towards getting into trouble, right?
Yeah.
And so what we did was we went through a very thorough strategic review, and I didn't ultimately demand the answer, but I said I'm going to facilitate this in a way that's going to get everyone to the same answer. And we're gonna ultimately then decide, and then I'll live with the decision. And on the surface, it was going to be 18% dilutive, doing that. And I'm a new CEO. So it was one of those
paranoid.
things where where you say at the right decision is we're going to sell this business. We sold it for 13.1 billion, and then we've been able to take that capital and through buybacks and other deployment of that capital has, taken the company where we're now, from that point in time when we made the decision to where we are today, without those earnings, we're 20% more valuable.
Wow.
That's great.
Than what those with the earnings. So those are when you have to stand up, make a decision, and then let it play out.
And do the right business.
Do the right thing.
I'm going to go back again for anyone with a question here for our panel. Okay, no questions. So final disruptor cheat sheet before I let you go.
From my perspective, it really comes back to people and culture. I think technology is going to come and go, and there'll be new technologies. But the theme for me is this clear executive-led sponsorship, which drives the culture, and then the people around it that help you change.
Anthony?
I think it's all about the stakeholders. So if you think about those, you've got board members, you've got executive leaders, you have employees, you have investors, shareholders, and it's really getting them on board with the importance of the agenda, communicating that so that everyone is doing it because they see it and they believe it versus I asked them. And I think it's a big change.
George?
So I would say you got to be the chief disruptor in these positions, and you got to be paranoid. And that the culture and the talent is everything. So we've done some organizational health work within our company, and when you can drive, even with the digital disruption, you can get engagement right from the bottom, believing that they can ultimately contribute to the overall strategy of the company. That is the winner, and then you can enable them with the digital disruption. And that's what every industrial company right now is wrestling with.
Well, there are no experts for tomorrow. There are only experts for today, as Jack Ma said. Gentlemen, thank you very much for joining us here for a special conversation. I wish you the very best of luck. Hope you continue to disrupt yourselves and the industries that you operate in. Appreciate your time. Thank you very much, ladies and gentlemen, for joining us.
Thank you, Shereen. You did a great job, Shereen. Thank you.
Shereen.
Yeah.